You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. Hello and welcome back to That Home Loan Hub. I am joined by Kunch. Hey Kunch.
Kia ora.
Let's build, let's build, let's build.
Housing under construction.
Today we're going to talk about builds and if you're looking to build, what you need to be aware of and our point of view.
Yep. Sounds cool.
Cool. So we've got a couple of clients at the moment that are keen to build because they want to have new housing, they want to have the latest insulation and also, all the bells and whistles that come with the new build.
Yep.
So what do they need to be aware of?
As in home lending side of things. Yeah. So when you're building, how the bank assess it, they assess, obviously, if you can afford the loan, but also they assess the cost overruns as well. So the cost overruns is what we call a contingency plan. So some builds may go over the fixed price that you've actually signed up for. So in terms of the assessment process, we'll just have to work out the extra 10% at some or 5% at others as well.
Yeah, and there are different types of builds, right? There are builds that come with, for instance, turnkey package where you pay 5% at the front and then the rest at the end.
Yep.
And this one is an interesting one. A lot of clients don't realize, but we can actually obtain them 12 months approval.
Correct.
So if they get certain things ticked off up front, we can give them that peace of mind for 12 months.
Yep.
So if the build is not going to be completed within 3 months or 6 months, they don't have to keep coming back to us for reapprovals. We can give them 12 months and hopefully within that 12 months, they get it built.
Hopefully.
But however, if it's not built within that 12 months, a whole new application will be required.
Yeah.
So something, again, that people don't realize. And often in that 12 months, a lot can change. They can go have a baby or two. Some people are incredibly talented.
Well, twins are involved in that, right? Unless you have Irish twins in that 12-month period.
Exactly, a lot can happen. So you got to watch out for things like that.
Yes.
Cool. So one, turnkey.
Turnkeys, yeah.
5% deposit up front, 95 at the end.
Yes.
Then there is...
So in terms of turnkeys as well, we'll just circle back to that. So you need to get a registered valuation at the start and at the end as well in terms of turnkey. The only thing is if the market changes,
property market goes down.
with turnkeys, you may, if the registered valuation comes back lower than what your purchase price is in 12 months' time, you do need to find the funds to make the difference. Otherwise,
The birds are chirping.
I don't want to say it.
Yeah, otherwise the bank may not be happy. You may not get the approval. So what you need to do in that 12 months time, during that 12 months, you need to keep saving. You can't relax.
Yeah.
Baby, until that house is built.
Yeah. So in my time, I have witnessed clients buying at the peak. So was it 2022, 23? Property is completed 24. However, it's come to, $60,000 less than what that purchase price for. Fortunately, most of the scenarios that I have seen, they've been able to make that difference up in terms of family members coming in to help in that sense.
Yeah.
But hopefully that does not happen again because, the house prices back then was an anomaly as well. So people did overcapitalize in, that 2021, 22 period. So, that's just another thing to be mindful when you are purchasing turnkey properties.
But the pros are, I guess, when you're renting, you don't want to be paying for the build, which brings me to my next point, with the progressive type repayments. So you signed a fixed price contract and there are progressive payments. So every time something happens, you make a payment.
Yeah.
So foundation down, you make a payment, roof is up, you make a payment, etc. So the cost of that adds up because you'll have to pay your rent plus mortgage at the same time.
Yeah, so that kind of loan is called a housing under construction, which is basically a house and land package. So you pay for the land first, and then Your second tranche of the loan is the construction part, where you progressively draw down on that loan. So the builder will invoice you. We send the invoice to the bank. They'll pay down that invoice amount to the builder.
And usually that's the one we see the most of, because at the moment, not many developers want to take the risk for the turnkeys. Usually they do the housing under construction. And then the third option is usually labor only. So if you're a builder yourself and you want to build your own home because you've scored a really good deal on the land section because you're working so closely with the developer, etc., that's also an option. However,
there's a few hooks on that one on the labor only side. So at the moment, you can borrow up to 90% on housing under construction and turnkeys, sometimes 95%. However, labour only is a little bit more restrictive in terms of loan to value. So at the moment, I've only seen 70% LVR in terms of labour only, but that's because when you're managing your own projects, there are a little bit more risks involved in terms of the cost overruns and things like that as well.
And also, remember, guys, if you're building your own home, it means you're being taken away from your actual work. So you can't be building your house and doing someone else's work at the same time. So this is where the bank will be looking at you more closely, going, well, how are you going to make your money while you're building your own home? So this is where having a buffer is very important. So normally you wouldn't do that as your first project.
No.
Normally you would already have a couple of rental properties that bringing you investment income. You'll probably have a partner that's working full time. So whether you're the female builder or you're the male builder, you know, the other person would be working full time. And you probably have very, very good budgeting skills.
Yep. So you need to provide a very in-depth spreadsheet of what your costings are going to be to satisfy the lenders in terms of that. You have to evidence your experience in that industry as well, like what have you done in the past sort of thing. Are you an actual licensed builder or is there a builder coming through? However, with the changes in building consents and things like that, things are probably going to get passed off quickly as well in terms of, you know, council signing off work and things like that. So it is a space that to look out for.
Yeah, no, that's awesome. Conch, did we cover everything?
Oh, there's just so much when you think about turnkeys and housing under constructions in terms of build. But I guess in summary, it's exempt from RBNZ, so the Reserve Bank actually exempts that. So there's no loan to value LVR restrictions on that. So you don't need a massive deposit in terms of purchasing a turnkey, and you can get approval quite smoothly on that sense. Registered valuation. We must get a registered valuation at the start and at finish, sometimes during the progressive work as well, in terms of that side of things.
Yeah, exactly. No, thank you so much. And while you were talking, I just remembered another very crucial point when it comes to turnkeys. If you're buying a property and the developer is throwing in a lovely gift for you, let's say a furniture package of $10,000, you know, so you sign the deal today, you get a voucher. Be careful, because if that's built into your sales and purchase agreement, certain banks have a policy to take away that $10,000 as the value of your house. So let's say you're signing a contract for $750 and you got a voucher for $10,000. Now, and you've got, 10% deposit only, whatever, the bank will not see the house value at $750. They will see your house value at $740.
Yes.
So that $10K voucher that you're getting is actually going to hinder your application than help you.
Well, you think about it, a voucher is essentially a gift of cash or something, right? It's not actually the value of your house. Yeah, so...
But apparently some banks are very, very, very strict on that. So just watch out and check with us before you make any major decisions. So Thank you so much. Stay tuned and check out any of our other previous episodes that might be relevant to you. And don't forget to share, subscribe, and like us.
Thank you.
Bye.
Bye.
And that's a wrap on that Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.